Welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy. Thank you for tuning in. If you're just tuning in, and it's been great to have you all day if you've been with us all day. Again, we've got lots to talk about, and there are other things we can dive into that we normally couldn't because sometimes these markets are a little quieter this time of year, and we can kind of explore. Let's explore now what that corn market's doing. Let's take a look at that corn market because that market is your money. And that's not bad, right? 5 1/4 cents higher in March, 5.96 1/4. May's up 5 cents, 5.97 even. I know I don't want to get in trouble for cheering on the market here, but I got out of bed. I get out of bed for 35 years as a producer. It's kind of ingrained in you. So how about soybeans? What does that look like? They've been 20 cents higher, right? 19 cents higher in that Jan market, 13.11 1/4. March is at 20.5 cents higher, 13.15 1/4. So we've got that 13 in front of the beans. We're still waiting for the 6 in front of the corn. How about Chicago wheat? 11 3/4 cents higher in that March wheat in Chicago, 79 1/2, marching towards that $8 level. May's up 11 1/4 itself at 7.91 3/4. All right, let's see about Kansas City, the hard red wheat in Kansas City. What's that doing? That's up decent as well, 17 3/4 cents in March, 8.31 even, 3/4 cent off the highs. May's up 17 cents at 8.30 even, and that's also 3/4 cent off the high. So hard red wheat charging right along in Kansas City. Let's take a stop in Minneapolis and see what's happening over there. Trying to eke out a gain here. March up 1 3/4 cents in spring wheat Minneapolis. It's 10.21 1/2 is last. May is up 3 cents at 10.12 1/2. All right, and then lastly, let's take a look and see if cotton can hold on to its gains. Oh, we've added to it. Here we go. That's good. We're up $1.53 at 107.07 towards the high of the day there in that March cotton contract. All right, let's bring in Brian Hoops from Midwest Marketing. Brian, just went through a litany of prices there. Not a ton happening. It's just one of those, the old traders would say, and I've said this earlier in the show, never sell a quiet market, right? We kind of just end up drifting higher. Now, we've got some decent gains in beans, but it just feels like the market kind of wants to levitate to the upside.
Yeah, that's kind of what it appears to. There's some forecasters starting to lower their private estimates for South American soybean production. I haven't really seen any changes for corn yet, but the soybean production coming down in Argentina and in Brazil, that's a supportive feature. The forecasts, I think, are supportive for soybeans and for corn prices to continue to move higher. This is the highest that Jan beans have traded since September the 16th, and putting in some premium in the marketplace. The one thing we're kind of missing right now is exports, and if that crop does continue to shrink in Brazil and Argentina, they're going to have less crop to export. That means demand will shift back to the United States, and so we should have some export business coming back our way. But kind of looks like and feels like going into this Christmas holiday, the market wants to be bullish and move higher, putting in some weather premium.
All right, I have a quick question for you. It just kind of popped into my head right now. What percentage of your customers right now are already starting to hedge into the new crop, say corn and beans?
I think it's a very small percentage that are actually doing something. There's a lot of talk about it, but I think with the high input costs, producers are waiting to see what fertilizer is available in the springtime, what the price is going to be if they already haven't booked it, and make those decisions. So I think as the markets mature and rally towards the spring, I think there's going to be a lot greater impetus to do some marketing and some hedging, especially if we get that December new crop corn close to $6. I think there'll be a lot of selling at that point in time.
Yeah, because you figure, we're still in the game. We lease land out, and I talked to some guys that are in it, say for $1,000, $1,100 an acre if they're renting. And, you figure whatever, 200 bushels an acre at $5 on the board. That's it's not very nice to have a break-even party, right? So we're going to keep a keen eye on those yields, keep a keen eye on that board because things are pretty expensive and pretty high priced, which is good, I guess, for these markets going into the spring. So it's going to be an interesting one for sure at these levels as a jumping off point. All right, stay right there, Brian. That was good stuff. We're going to go away, pay some bills. We're going to come back and talk livestock with Brian Hoops after these messages. All right, welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy. Great segue into talking about the cattle markets. Let's get after it. Let's take a look at what the live cattle are doing because these markets are your money, right? How about the Feb market? Live cattle up 27 cents, 136.27. Now we've just tipped up 30 cents. I can see by the range being small and the change being small, live cattle are on holiday. All right, let's take a look at what the feeder market's doing for us. This one too, a little bit better here. The backs are actually gaining. We've got Jan is up 72 cents at 159.95. But you go out to April. April's up $1.07 now. So is May, 164.82 in that April market, 167.32 in May. So some dip, okay gains for a quiet market today in the feeder cattle. Let's then moving right along, as they say, to the lean hogs. What do we have happening over there? We've got a decent gain in Feb, $1.07 there as well, with an 80 in front of it, 80.55, close to the highs of the day. April's up 62 cents at 84.12. Let's bring in Brian Hoops from Midwest Marketing. Brian, thanks for sticking around. Anything to say about the livestock?
I think you hit the nail on the head. It's on holiday mode right now. I think if we see any cash cattle trade, it's going to be, maybe this afternoon or Wednesday. By Thursday's cattle and feed report, I don't suspect we'll see a lot of cash being traded out in the plains. Probably going to be wrapped up by that time. But next week, though, I think we could see some strength in this cash market. But I'd look for steady cattle trade. We're probably getting a little bit of a reprieve with higher boxes, higher stock market today in the cattle. So there's just not that selling pressure coming at a lot of the grains or the livestock markets like we saw yesterday.
What's the biggest risk, or what you could throw at this market to kind of see it tail lower? What do farmer or ranchers have to worry about with these high prices?
Yeah, I think the biggest concern we have, is the economy struggling and producers, facing this inflationary pressures. It's a form of a tax for producers and restaurant goers. The consumers facing this higher inflation is less money out of their pockets to spend on beef, and so if we see a slowdown in that beef demand, I think it could be real detrimental for livestock prices. Everything else, I think, is set up for this market to be strong all the way into 22, into the fall time frame, if we can get past any type of economic concerns or consumer spending slowdowns.
Yep. You know what? I'm worried because I was absolutely thinking the same thing when I asked the question, and that would have been my answer too. So we both agree. I don't know if that's good or bad, but I'm 100% on board with you there. Thank you very much. That's Brian Hoops from Midwest Marketing. Thanks for being on the show. Merry Christmas. I'm going to bring it back to Nashville so I can throw this back over to Janet.